We've got three ideas here in growth stocks, two of them crypto-related, at least partially. We're joined by Martin Toner, Director of Institutional Research in Growth and Innovation at ATB Capital Markets. Great to see you as ever, Martin. Start off with Shopify. What's the attraction here?
Yeah, I think investors should be focused on a few things here. Number one, the revaluation of growth assets. And that's where Shopify comes in. The other two are adoption and enthusiasm for the adoption of cryptocurrencies. And then the last one is the investment in digital infrastructure because of AI. So getting back to Shopify, we had a significant sell-off here on macro-related concerns. Shopify, like many stocks, sold off considerably. It's bounced here a little bit, but it's still well off its highs, 20% off highs from earlier this year. And when these sell-offs happen, I think people try and high-grade their portfolio, especially, and they look for high-quality growth. And Shopify is a great example. So becoming the de facto standard in e-commerce platforms.
And a de facto standard.
Oh, I think so, absolutely. It's becoming the go-to platform for companies large and small. Mm-hmm. You see, it's always been good at attracting small merchants, but now it's attracting large merchants, like for example Nike. Its payment application is also becoming the de facto standard. I don't know about you, but when I get onto a non-Amazon e-commerce site mm-hmm. and I want to pay, I want it to happen quickly. And when the when Shop Pay button is there, mm-hmm. You're going to be done in like 10 seconds. And so that's becoming a bit of a strategic asset for Shopify, helping to bring more merchants onto the platform. And ultimately, the company's innovation is helping those merchants grow, right? And its business model is designed to benefit from its merchants doing well. When we look at what it's growing at, mm-hmm. it's growing at about 30%. And you look at valuation, stock trading at around 11 times price to sales. That's well off the highs from earlier this year. And it's sort of in the middle of the range. So I look at this as like, it's not a like once in a lifetime opportunity. Like that point has kind of passed in this crisis, but it's a good opportunity to buy a good company at a reasonable price.
And it has come back pretty smartly, still down from its record highs, but quite the recovery. Yeah. Galaxy Digital, what's their role in the crypto universe?
So their role is as a broker, and they are facilitating the trading of digital assets, mostly by institutions, or actually exclusively by institutions. So think hedge funds, Bitcoin miners, but also traditional companies that might want to begin to incorporate cryptocurrencies into their business. So we had Circle IPO a couple of weeks ago, where it was very successful. I think it shows tremendous enthusiasm for these assets. And when you look at the adoption of stable coins, across the business landscape, across the retail landscape, it suggests that Galaxy is going to have more customers going forward as this trend continues.
So stable coins are actually linked to a currency, is that right?
Stable coins are linked to a currency, typically the US dollar. So as opposed to other cryptocurrencies that can be quite volatile, stable coins are very stable, much like the US dollar. And that's why they're more likely to be adopted to be the cryptocurrency or the digital asset that is adopted for everyday purchases, but also just like everyday business, right? There could be lots of business-to-business applications for it. And the reason is lower cost and lower friction, more ease of use.
So they are likely to become the medium of exchange rather than a traditional crypto like Bitcoin, where it's less predictable.
Yeah.
Right. And then finally, TeraWulf, we think of them as a Bitcoin miner, but they're moving more towards being a REIT?
Yeah, their long-term ambition is to become a data center REIT. And they are benefiting from this trend of the investment in digital infrastructure because of AI. Mm-hmm. You have companies like Microsoft, Google, and others spending considerable amounts of money developing data centers because AI is very compute intensive. And this is creating a race for power. So the scarce asset appears to be the ability to connect large amounts of low cost and reliable power. So that's what TeraWulf has. They have a sole asset in New York State, currently Bitcoin mining on it. They currently have one deal with a company called Core 42 to rent their data center capacity for AI. And this area of data centers is changing. The chips that are coming out for AI are much hotter than previous chips, and these data centers require much different cooling infrastructure. And TeraWulf and a number of other Bitcoin miners, but also other companies, are hard at work developing this new configuration for data centers in order to do deals with hyperscalers like Google, Apple, and others.